In today's weekly Forex forecast, we're talking about the DXY, the euro, the pound, the dollar versus the Swiss franc, and also gold. And this is going to be an incredibly significant video because we have the June and quarterly close coming up on Monday. And I really think with where these markets are trading, where the market closes on Monday is going to give us a lot of clues about where we could be headed for the rest of this year. So let's go ahead and first of all, take a look at the DXY here on the monthly time frame. And we've talked about this before, but you can see where the DXY has been moving within this ascending channel going back here to 2011. So this is the 2011 low back here, and you can see where we've got a few touches off of this lower level. Currently, the DXY is sitting right there in that area, which I'll zoom in here in a moment and show you exactly what we're dealing with here with the DXY. But, for the most part, again, the market is sitting right in that area. Now, we're coming up on the monthly close as well as the quarterly close, and you can see where if we go to the daily time frame, you can see where the DXY is just below this mark. Okay, now I will be the first to tell you that when you're dealing with a trend line that goes back 14 years, it is very, very difficult to tell exactly where that level is. However, I always opt for the most conservative placement possible. I really think that these recent lows through here are the clues as to where this level should be placed. Furthermore, we have that 97.7 level that we've talked about, that horizontal level from 2022. So this also comes in right there at that 97.7 area. So obviously with the DXY trading below this, you can see where dollar bulls are in trouble as of right now. Now I'm filming this on Friday, so we do have a few hours left in the session. And also keep in mind that Monday is the last day of June. Okay, so technically speaking, this market still has one more trading day, okay, to get back above 97.7. Now I'm not saying it's going to happen, but the market could potentially do it. We know that the DXY could absolutely move from 97.37 where it is right now back to 97.7 within a day. That's not very far at all. So keep that in mind, right? As we go into June, I think this is going to be really important because if we see the DXY close back above here on Monday going into next week, that could give us a lot of clues about July. It could actually be a bullish indication for the US dollar. Now, looking at the weekly time frame, if we do not see the DXY close above that, the next area of support here for the DXY is going to come in around 94.65. So very easy to see going back here to, 2020 all the way over here to 2021. And you can see where this was a pivot for the DXY during this entire time. Okay, so this would be the next support area here, 94.65 for the DXY, if we get the DXY closing below 97.7 on Monday. All right, so obviously, too, the market could technically close June below here, and then close July back above, or a week in July back above. And that could also be bullish. But, I think the bottom line here for the DXY is that the market has to really reclaim 97.7 on Monday in order to stay constructive here. Again, I'm not saying it's going to happen, guys, but it is one possible scenario. Now, one interesting development here on Friday, and you guys will be watching this over the weekend, so it won't really apply to you. However, we were talking about this in the VIP area, which you can see that we do have the potential for a little bit of a ascending triangle here off of these lows. And you can really see this on the hourly time frame where we got a failed breakdown from here. So you can see these lows through here. And what I mentioned in VIP is we got the close below, we got the close right back above, and I told members that this became support. We had resistance up here at 97.4, okay? So, really nice range here on Monday if you were trading this. This could be indicative of a move higher if this does play out on Monday. But again, guys, I am not going to sit here and forecast anything just yet because we have an incredibly significant close coming up on Monday, again, with that June close and also quarterly close. So we'll see where this goes, guys. I mean, bottom line is 97.7 here for the DXY is going to be important for Monday. Close below this becomes resistance. And obviously, if we close back above, then that could be a failed breakdown for the DXY and could be bullish. Okay, so let's move along here to the EURUSD, which is also obviously very bullish. And we talked about this on Thursday, but I want to focus on this chart here today. And I'm going to go to a 3-month time frame since we have the quarterly close coming up on Monday. And this is a really eye-opening chart, guys, because you can see here where going back to 1985, and like I explained on Thursday, the reason that you have pricing data going back, prior to 1999, which is when the euro was started, the reason that you have this data here on FXCM is because this uses a pre-euro basket of currencies to make up the pricing data prior to the euro. So what you can see here is that we have a very clean ascending channel for the EURUSD going all the way back to the 1980s. The market fell below this. Okay, the pair fell below this back here in 2022, retested it as new resistance in 2023. And if I move in, you can see how clean this has been over the past few years. So ever since we got the breakdown back here, right? Breakdown through here, we had the euro retested up here as resistance. And currently, the market is trading back above it with about one trading day left to go in the month and quarter. So again, this is going to be an incredibly significant close coming up here for the Euro USD, to where I think if we see June close above here, so looking at this on the daily time frame, you can see we're not really fully respecting this on the daily, and that's to be expected on a level that goes back decades and is most visible on a quarterly time frame. But you can see that this is the general area down here that the euro needs to hold above, right around 115 as we head into Monday's close. Now, currently, obviously 200 pips above that area, so it does kind of look like we will get that. But just keep in mind, guys, that at the end of a month, especially the end of a quarter, we tend to get a lot of volatility from these markets. And I don't think this is going to be any exception considering where these markets are trading. Okay, so just keep in mind that the job isn't finished yet. Yes, the euro is bullish. I'm not saying that it's not, but the euro has to close above this area here around 115, maybe just above that mark in order to stay constructive here as we head into July. Now, if that is the case and we get that close, then like I talked about on Thursday, it's pretty clear where we head from here. Obviously, we have levels like 119, which we've actually talked about before. And I'll talk about that one here quickly first before we move on. But you can see that all these highs right back here. What's interesting is that 119, okay, over here, these highs, this is actually the objective of the bull flag that broke out a few weeks ago. So this right here would be your first resistance. However, longer term, if we were to see June close above that 115 mark, then what we could see here, looking at the 3-month time frame, right, you've got this very clear pivot for the Euro USD back here at these lows and also these recent highs. Okay, so right through here, you can see where we have all these lows here for the euro and these two recent highs. So bottom line, guys, if we close above here in June, 115 or thereabouts flips to new support, and this area up here around 123.20 could become resistance. Now, if the euro does close below 115, okay, then we are looking at the potential for this to be a failed breakout, okay, and that could be bearish down here towards some of these lows. Now, one in particular I'd be looking at is this area around 112, maybe just below, considering the significance here of this low you see on the daily time frame, and also if we go to something like the monthly time frame, right? This area down here would be incredibly significant because you have all of these range highs back here around 112, okay? So this was our range that we were in. We swept the lows down here. This is where back here I was thinking we were going to sweep the highs and drop back in the range. We didn't get that. But this down here, if the euro were to close below here on Monday, again, it seems far-fetched, guys, it's 200 pips, but we all know that surprises can happen, especially when Trump is in office. So just be careful out there. If we were to get the sub, 115 close, then we're looking at potentially a move back toward the 112 area. Okay, so that's what I'd be watching for if we do get that close below 115. But as of right now, there is absolutely no reason to be bearish here with the euro, trending higher highs, higher lows, and also trading well above 115. But we'll see what we get on Monday, guys. I mean, again, that's going to be incredibly significant for these markets. So looking at the pound, this is a market, guys, that right now I want nothing to do with because it is just very sideways here over the past couple of days, not really giving us much indication of where we go from here. And I talked about this before, but this rising wedge back here, it looked very similar to what we had back here in 2024. And we also had RSI doing the exact same thing pretty much as 2024. Obviously, that did not work out. We got the pound moving up here and testing this confluence of resistance up here. Now, I did not short this. I was not, trying to short up here in this area just because I want to wait and see what we get on Monday. And you can see where this level back here at 137.50 is this high right back here from 2022. And then again, you've also got these two trend lines that come in that area. Okay, so if we just remove these though, just to kind of clean things up a little bit, really, we're just dealing with this down here at 136.30 support and 137.50 resistance. Okay, now above that, we do have the 138.70 area, and below 136.30, we've got 135.30 or thereabouts. This was actually an imbalance back here that I was looking for. Didn't get that retest before the rally, but this area would be, key as well. But then you've got these lows down here and these highs. Okay, so really just a range right now for the pound. Obviously, in an uptrend, there is no reason to be bearish here, guys. But again, I do think that Monday's session is going to be really critical when you look at the DXY, the euro, and the pound. Okay, so let's take a look now at the dollar Swiss franc, and then we're going to get into gold, which I think is actually probably one of the best looking charts in today's forecast. Now, before we move on, if you guys are enjoying this content, be sure to subscribe to the channel and smash that like button because this content takes hours to make and a few seconds to like it. So looking at the dollar Swiss franc, guys, we have a few things happening here. Obviously, a very steep downtrend following a range over the course of several years. And right now, what I'm watching here is we have on the 4-hour time frame, you can see we have a very clean descending channel off of some of these highs and lows. So these highs up here, you've got this very clean channel and these lows. Now, one look at this and you might be thinking that you should probably be looking to buy here, but the problem with that is that you would be buying essentially, first of all, within a downtrend, right? That's always risky, especially with this kind of downtrend. You've also got the DXY trading below that 97.7 level, at least as of right now. So you've got those two factors that are going against you if you're trying to buy this, and you've also got the market breaking down below this range low, okay? So a few things are happening here to where I don't like the idea of buying this. Now, if the dollar or Swiss franc were to reclaim levels like 80.40 next week, okay, on Monday, then that could change things, because reclaim this up here and we're essentially just reclaiming the bottom of this range. And then that would start to look a little bit more bullish toward levels like 81.27 and 81.90, etc. Okay. So right now, guys, this is just an indecisive market. It is trending lower, yes, but you also don't want to be shorting, in my opinion, down here, because you'd be shorting low, right? If anything, if you're trying to short this market, you'd be waiting for a close below here, going into that monthly close and quarterly close, and then from there looking for shorts, from up here somewhere. But that's only if we close the month below here, guys. Again, I think Monday's going to be really critical. For me personally, I'm just waiting for Monday to pass, see what we get there into Monday's close, and then go from there. All right, so this has the potential to reclaim it, but as of right now, there's no sign of that. If we do get the monthly close below 80.40, then you're looking at the next stop potentially being levels like this down here. Okay, there is a pivot down here from 2011, right there around 77.80. Okay, so a long way down there for the dollar Swiss franc. If we were to get the confirmed breakdown, you've got levels like this down here. But again, if you are trying to short this on a close below here, then you've got to be careful, because you don't want to be shorting, in my opinion, down here. You've got to be looking to short high. Okay, you want to short high, not low. So just keep that in mind when we're going into next week. All right. But again, I think that, I keep saying it, but I think that Monday is really the time to just stand aside and wait to see what we get here from these markets, because we could, technically, I'm not saying that we will, but we could have some surprises on our hands going into July. Okay. We'll see what we get though. Looking at gold, guys, to wrap up. Again, I think this is the most appealing chart right now going into July, only because we have a very clean and break that happened on Friday. Okay, so what I talked about last week, I was talking about the bullish potential here at this trend line. However, the benefit of being a VIP is that last night I was telling members, when I looked at this here, okay, gold was trading right through here, and it was pressuring this level again. And when I see a market repeatedly testing a level like that, that's what's called heavy price action and indicates a breakdown. So you compare that to touches like this back here, okay, so like this one back here, or even this one. Right? Because even though we had 3 touches back here on this level, and granted, this trend line really wasn't established back then, but you can see here by the 3rd touch, this was very bullish, a very bullish move here from that level. But when I see a market really start to weigh on a level like this, like gold was last night, that tells me that a breakdown is likely, and that's what I told VIP members. And sure enough, we did get the breakdown here from this 33.15 area. Okay, so the idea for next week, in my opinion, is I'm interested in this area back here off of this closing price. So if this breakdown holds up, which as of right now, it looks like it will. So barring a bullish reclaim here, in other words, as long as gold is below this pocket around 33.09, then I like the idea of a rotation lower going into next week down here toward these lows. Because really, when you look at this, okay, now with this breakdown of this 2025 trend line, I mean, again, keep in mind, this goes back all the way here to the start of 2025. With this right here, you're essentially just looking at a range. Okay, so these are your range lows down here, range highs up here. Okay, so that's your range. And if you know the market is breaking down from a trend line of this significance, then you know that the next likely stop is potentially this pocket down here in this area to retest this low. Okay, it doesn't mean that it will happen. However, there is a good chance that we get that. Now, obviously, what would negate that is if next week opens up and we get some bullish movement here early next week, and we see gold reclaiming areas like this back here. Okay, if it were to reclaim, back above here next week, then that, of course, would be bullish back here toward the 34.30 area. All right, but as of right now, guys, I'm going to go with the breakdown, because this is also a weekly breakdown that we're seeing so far. You can see this here on the weekly time frame, pretty confirming as far as the breakdown. All right, so as far as where I'm looking to potentially short this, again, we do have this area around 33.09, and what's interesting about this, I talked about this some last week, but turning on TPO, time price opportunity, this is an indicator that essentially shows a volume profile for a market. And what you'll notice up here, I have everything else. I have the blocks turned off, but I just want to focus on the single prints, which this shows a aggressive movement in a market where you get almost an imbalance between buyers and sellers. And you can see here on this breakdown, we got just that. Okay, so on this breakdown of that trend line that we just looked at, you can see where this was so quick on this breakdown that we have this single print that formed up here around 33.06. Now, it's no coincidence that this also formed just below that 33.09 level, because keep in mind that this right here on the daily, okay, this is off of that closing price back here. You've got this low through here around 33.09. And then looking at the hourly, you have this single print up here around 33.06, okay? So what I think we could get next week, if we look at this here, right, what I think we could get is if gold can bounce from either, here or maybe a bit lower, not sure where it happens, but if we do get the bounce up here toward this area, I think that could potentially provide a short opportunity down there toward the range lows. Okay, so a lot of room to work with here for gold if we do get that move between 33.09 all the way down toward 31.30. Now, obviously, like I said, if gold were to reclaim areas like this, if we don't see a bearish reaction from here and gold just continues to turn higher, pressing this level and then closing back above here, then that right there would be bullish because it would be a failed breakdown, okay? So we'll see what we get next week, guys, but keep in mind, single print up here, buy side single print at 33.06. We've got that key resistance area around 33.09 following the breakdown. And again, support comes in down there at those range lows right around 31.30. All right, guys, I hope this video has helped. If it has, be sure to subscribe to the channel and smash the like button. Don't forget to join us in VIP. Claim your 85% off lifetime access. See the link in the description. Have a great weekend. I will talk to you again next week.